On Tuesday, NZT, U.S. stocks plunged further, extending a sharp sell-off fueled by concerns over the impact of President Donald Trump's tariffs on economic growth. All three major indexes opened significantly lower on Monday after Trump stated in a Sunday interview that the U.S. economy was entering a period of transition and declined to rule out a recession. Speaking on Fox News Sunday Morning Futures with Maria Bartiromo, Trump was asked whether he expected a recession this year. He responded, "I hate to predict things like that. There is a period of transition because what we are doing is very significant." At the opening bell, the Dow dropped around 400 points, 1%, and extended its losses to 530 points by midday. The broader S&P 500 fell 2.2%, while the Nasdaq composite declined 3.6%. Tech stocks led the sell-off on Monday, weighing on the S&P 500 and pushing the Nasdaq into correction territory. The Magnificent Seven tech giants, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, were all in the red. Tesla dropped over 10%, while Nvidia declined 4%. Palantir, PLTR, a standout in the artificial intelligence sector, slid 7%. By Monday morning, Tesla had erased all its gains since Trump's re-election in November. "When stocks overextend on the upside, they overextend on the downside," said Gina Bolvin, president of Bolvin Wealth Management Group, in an email. Stocks have been hit hard this month amid uncertainty surrounding Trump's erratic tariff policy. The S&P 500 dropped 3.1% last week, marking its worst week since September. Trump had threatened a massive tariff on imports from Canada and Mexico, but then announced a delay until April 2nd. He also doubled the tariff on Chinese imports to 20% from 10%, and a 25% tariff on all steel and aluminum imports is set to take effect on March 12th. Additionally, Trump threatened a 250% tariff on Canadian dairy products and a tremendously high tariff on Canadian lumber. On Sunday, he told Fox News that tariffs may increase as time goes by. "The talk of tariffs is, in many ways, worse than their implementation," said David Bahnsen, chief investment officer at the Bahnsen Group. "The talk of tariffs, reversals, speculation, and chaos only breeds uncertainty. I don't believe the administration knows how the tariff situation will play out, but if I were a betting man, I'd say it will persist long enough to harm economic activity for at least a quarter or two, and ultimately lead to a deal with different countries that will make everyone wonder why we went through all the fuss," he added in a note on Monday. Meanwhile, cracks are appearing elsewhere. Layoffs are rising, hiring is slowing, consumer confidence is weakening, and inflation is increasing. The yield on the 10-year U.S. Treasury bond slid to 4.215% as investors rushed to buy government bonds, signaling concerns about economic uncertainty and growth. Looking ahead this week, investors will closely monitor the monthly inflation data expected on Wednesday and Thursday to determine whether inflation remained persistent in February. A recession is generally defined as 2 consecutive quarters of negative GDP growth. The National Bureau of Economic Research's Business Cycle Dating Committee, the official arbiters, says a recession involves a significant decline in economic activity that is spread across the economy and lasts more than a few months. How long this period of investor caution persists depends on how quickly the global trade uncertainties and the resulting threat of a recession dissipate, said Sam Stovall, chief investment strategist at CFRA Research, in a note on Monday.